From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. We start with a check on the markets. Joining us today is Abigail Doolittle. So, Abigail, there's a little green up there I see in equities. At the same time, let's be honest, it's Friday before a long weekend. Are people on the way to the beach?
It feels that way to some degree, David. A cruise control rally, and not just for stocks. It's interesting. We have stocks up slightly, we have bonds up slightly, we have the dollar up slightly, we have commodities up slightly. So it is the everything rally into this long holiday weekend. What is doing less well, the S&P 500 up about 0.3%, the NASDAQ 100 up 0.7%. Today is not so reflationary because we actually have the Russell 2000 down fractionally, and we have the KBW Bank Index down 0.6%. That tells you, or that is on bonds rallying, because that, of course, means yields are lower. What's so interesting for the Russell 2000, David, right now on pace for its 8th up month in the row. If that happens, that will be the longest, it will match the longest monthly win streak going all the way back to 1995. But right now, the Russell 2000, the monthly gain for May, up just about 0.2%. So it's going to be very interesting to see what that small cap index does. For the S&P 500, higher on the month. David, tech, however, is lower on the month. That could be a little bit of a warning signal. We saw that back in September of 2018 ahead of the fourth quarter volatility. So never a dull day.
Okay, thank you so much to Abigail Doolittle for that report on the markets. Well, that's the markets. Let's talk about the economy now. The Fed's favorite measure of inflation, the PCE core deflator, came in a bit higher than expected earlier today at an annualized 3.1%. That's well above the target of 2%. To help us interpret the numbers, welcome now Tiffany Wilding, an economist for Pimco North America. Tiffany, welcome back. Great to have you here. A lot of people are nervous about inflation. Do these numbers make us more nervous, less nervous, or just about the same?
Hi, well, thanks for having me. I mean, I think overall today's numbers were kind of in line with expectations. The CPI report for this month was the one that really surprised, but after that, we kind of knew what the PCE was going to be. So yeah, 3% PCE inflation is above the Fed's target, but it's really important to understand what's driving that inflation. And if you kind of look under the hood, really the factors that are driving it, we would say are completely temporary. I don't think these recent data prints have reduced our conviction around that. And as a result of that, you have bottlenecks and other things that, are just resulting in sort of temporary higher inflation as the economy opens. As things kind of resolve over the course of, the next several quarters, that should come down. We actually think that core PCE inflation will end the year closer to 2.5%. And you could see it settling down a bit more in early 2022. But again, we don't think this is too much of a concern, for the Federal Reserve.
Yeah, Tiffany, in your writings, you distinguish between a price adjustment, you call it, and really an inflation trend. How can you tell the difference between those two, and how long does it take until you know?
Yeah, so I think that's a great question, and that's really the key question here. When you think about a price level adjustment, that's kind of a one-time move in the price level. So that causes a temporary boost in inflation, but then inflation kind of settles back down after that price level adjustment is over. That's different than if you have a move higher, in kind of what I call the inflationary process, or inflation continues to move higher. And really, I think what causes that is you have people whose inflation expectations are moving higher. And so this is why inflation expectations are so important for the Fed, and something that we're really monitoring here. And I think that inflation expectations, they have been low. I've even argued prior to the kind of more recent acceleration in some of these measures, they were probably anchored underneath the Fed's inflation target. So the fact that we're getting a little bit of above target inflation and inflation expectations have moved up a little bit, I actually think is good news for the Fed. Now we want to continue to kind of monitor data incoming. We never want to overly interpret any one report, but I don't think this is a cause for concern for the Fed. I don't think that they're too much behind in terms of hiking. We're not that worried either about, kind of a 70s style inflationary event. So we think that, the Fed's going to be able to sort of manage this, just right and kind of get a Goldilocks outcome here.
Tiffany, if we look back in history, how sticky, if I can use that word, are inflation expectations? How long does it take for people to start reacting to the fact that we are getting higher inflation numbers? And by the way, the Fed keeps saying they're not going to do anything about it anytime soon.
Yeah, exactly. And I think that's really the key point here. Inflation expectations, historically, if you look, they do appear to be pretty sticky. So you need several years of, kind of trends in inflation. So kind of coming off the 1970s, forecasters were, sort of systemically overestimating longer-term inflation, and inflation was coming in below that. So the Fed was able to bring it down faster. But inflation forecasters sort of slowly brought their inflation expectations down as realized inflation came down, and that tends to happen with a lag. So we've found that kind of a 5 to 7 year lag is what it is tended to be, and so that suggests that the Fed can have a period of above target inflation. We think 2.5, maybe some bouts of 3. Over the next several years, will be more likely to bring up and on a more permanent basis inflation expectations. But if it's a 1 year kind of bout and we settle back into something below trend on inflation, below the Fed's 2% target, I think that's not going to be enough to to kind of more permanently bring up inflation expectations.
I wonder, Tiffany, whether everything might be accelerated right now. Certainly the downturn was accelerated and the bounce back is accelerated, but we also have the government pouring trillions, literally trillions of dollars into the economy. We have some economists like Larry Summers saying it's several times the output gap. Is it possible that will turn around inflation and inflation expectations faster than otherwise would?
Yeah, no, I mean, we certainly believe that this will turn it around faster than it otherwise would. I think that, though, still the magnitude is where we would sort of take issue with some of these larger estimates on the impact to inflation. So, I think the key question here is, so yes, the fiscal stimulus is much larger than the output gap, but the key question here is how much people save versus spend. And on this, what we've found or what we see is that the majority of the kind of call it excess savings from last year are actually sitting on the balance sheets of households with the highest income and wealth. And those individuals just tend to be, they tend to spend less. Economists call it, lower propensities to consume. So we think that money, although some of it will get spent for sure, and that kind of brings forward the time to recovery in the economy, not all of that is going to get spent, especially not over the next year. So we think, a big portion of that excess savings actually could find itself, in residential real estate investment, for example, or other investments, financial markets, et cetera. And that's more likely in our view than a boost, an outsized boost to consumption.
Well, it's interesting. I was going to ask about, if I can call it, dry powder in the households, and the fact that we are well above trend line on savings. It's coming down some, but it's still well above 10%, which is higher than historically we've done. Do you think that that is overwhelmingly with the wealthier people who are unlikely to spend it as fast?
Yeah, exactly. So the savings rate, you have to know that is a flow measure, a flow of savings. So that's how much of my income that I get every month am I actually saving. So there's a difference between that and the kind of stock of savings out there. How much is actually in my bank account. And so it seems as the accumulated excess savings, so that kind of stock measure over the last, call it year, is close to, 1.6 trillion or maybe even a bit higher now. So that's the number that we don't think is going to come into the economy. However, as things normalize, that kind of flow of savings will probably normalize as well. Because you have to keep in mind that one of the reasons why these savings measures are so elevated is because we have gotten months of, federal government support, the income tax rebate checks that went out to households, as well as unemployment insurance. And of course, those things won't be, they are temporary, they won't be permanent. So we should see the savings rate come down, as those federal government programs, really start to wane. But that doesn't necessarily mean that all of that 1.6 in accumulated savings will get spent. And I think, again, that's the key issue here, in differences between, some of the really high expectations for inflation and our estimates.
Okay, Tiffany, that was very helpful. Thank you for being with us. That's Tiffany Wilding. She's Pimco North America economist. Coming up, we talk with one of the lawmakers asking the questions of bank CEOs yesterday, Republican Congressman Blaine Luetkemeyer of Missouri. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. President Biden will initiate congressional spending negotiations today when he sends lawmakers his full fiscal 2022 budget plan. White House National Economic Council Deputy Director Bharat Ramamurthy tells Bloomberg he believes big companies have the capacity to pay more in taxes to help fund infrastructure investments.
In 2018, the effective tax rate paid by U.S. multinational corporations was 8%. And compare that to the tax rate that small businesses pay, compare that to the tax rate that your average middle-class family pays. There's clearly capacity for these companies to pay more in taxes to help finance the investments that, by the way, are going to be good for those companies in the long run.
Mr. Ramamurthy says that President Biden's budget is about, quote, improving and increasing the productive capacity of our economy over the long term, end quote. As we head into the Memorial Day weekend, gas prices in the United States are at their highest levels in 7 years, but experts say they don't expect that to keep drivers off the road following more than a year of caution during the pandemic. AAA estimates 37 million people will be on the move this weekend. That's up from 60% last year. In Taiwan, officials say the COVID-19 outbreak is still not under control, despite strict social distancing measures. The island's death toll surged by almost a third in the past week, with authorities reporting hundreds of new infections. Taiwan's health minister said today he hopes 60% of the population can get at least one dose of a COVID-19 vaccine before the end of October. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Do you intend to alter your business in China because of these human atrocities that's going on?
So we operate in over 100 countries, and we operate under the law of the land in each of those countries, and under the law
of the land is the Communist Party law.
But we follow the foreign policy of the United States of America, which is your policy. So we follow engagement.
Foreign policy in this country.
And when you tell us
China.
not to. And when you tell us not to, we don't. Like Cuba, how we do business in Russia, we follow exactly what you tell us to do because we're patriots just like the rest of you in this call.
That was Republican Congressman Blaine Luetkemeyer pressing J.P. Morgan CEO Jamie Dimon yesterday about his bank's policies when it comes to China. Welcome now the congressman himself. So, Mr. Luetkemeyer, thank you so much for being with us. I'm not sure you got a perfect answer to your question. What I understood you be saying is you have certain social policy in the United States with respect to things like coal and the environment. Are you applying them in China? Did you get an answer to that question?
Not really. I think he dodged the question by saying that he adheres to the laws of the country. Well, there's each one of these CEOs that were there yesterday their banks have made statements with regards to human rights. They have ESG reports that they're out there. They're going to do away with coal financing here in this country. Yet China produces and uses needs 4 more times more coal than we here in this country. And so. Where is the outrage about that? Where is the decision to change your business model in China? It's not there. That's hypocrisy. The situation with human rights, which I was trying to make the point with Mr. Dimon yesterday, is, they talk a great game here in this country, but when it comes to actually standing up to the communists in China, let's be honest, the Communist Party runs the country of China. They're one and the same, the government and the party is. And he's not willing to stand up for the million of Uyghurs that are being systematically murdered in this country. Even this administration, the present administration, has recognized that they need to go after and find out exactly what happened in the Wuhan lab and how the nefarious actions went even further. And yet these different banks are willing to ignore their human rights statements and continue doing business with China, which is a human rights abuser of the nth degree. This is the point I'm trying to make, is that the hypocrisy of their actions needs to be pointed out and they need to stop. So that begs the question then, why are they doing this? And I asked that question of a couple of them. They said they weren't going to change their business models, which if that's the case, then they're number one, either they're political activists, which our ranking member made the comment yesterday that business and politics don't usually mix, because if that's the case, politics wins out, which that shows that that's true, or they themselves are willing to jump in bed with our enemies, which I hope is not the case. But that is a horrible place to be for them, and that needs to be pointed out that their actions are not consistent with what I think is good foreign policy, which if you look at the past administration, they pointed out that China was not a good actor. We need to work our way away from China and not get in deeper.
Yeah, there's a lot to be unpacked there, but I actually want to turn to something else because there's a headline that just crossed just now, and you are involved in this, and that is the Senate Republicans have now blocked that commission on investigating the January 6th attack. I know that on the House side, you voted against it, if I'm not mistaken. So what is your position on this? Because obviously this was a horrific act. Those of us who watched it couldn't believe that was happening in the Capitol when they were counting the electoral votes. What is the argument against having a commission take a hard look at it, a bipartisan commission?
Well, the problem is it's a very political bipartisan, excuse me, a very political bipartisan commission. I'm very aware of Leader McCarthy's excuse me, efforts with Pelosi to try and get this thing to a bipartisan position. She was insisting on having a Democrat majority. He worked and worked and worked, got it to where it was a 50-50 situation. Their intention from the beginning of this is not to allow a uniform and fair process. And this is what we need to be pointing out. There's multiple different commissions and investigations going on right now. For us to get in the middle of that with another political commission is not what's really productive for this situation.
We did it after 9/11. We did it after 9/11. We managed to do it. Does it say something about our government that we can't get together, Republicans and Democrats, and agree to look into something like this? Because as I say, for many of us, we thought this went to the very constitutional fabric of our republic, actually. When you're counting the votes for the president, to have this mob go in and threaten the lives of people like you, lawmakers up there, it seems like we should be able to at least take a look at it and see what happened.
Well, I don't disagree that there shouldn't be some investigations, and there are investigations going on by multiple entities right now. The problem is that the Speaker Pelosi is trying to politicize this situation for political gain, and we're trying to call her bluff on it because that's exactly what it is. It's a political exercise on her part. The way she started out shows exactly where she wants to go with this thing. So I think for her to just check a box for her own political necessities is wrong. This needs to be something that's a true investigation, a true commission looking for the truth. There's plenty of evidence out there with all these other investigations going on that you can find a way to get to that point. So that's our point.
So, Congressman, let's go back to the economy, if we could, here for a moment. We're about to get a budget proposal out of the White House later this afternoon, which is reported to be about $6 trillion, $1.3 trillion of deficit each year for 10 years. We also have the infrastructure proposal out there. Give us your take about exactly what the economic policies of the Biden administration are doing, and particularly for small business, because I know you're very involved with small business.
Yeah, the small businesses are being devastated right now by these proposals. You know, we're back in district right now, and I've been out and about all week long and continue to interact with all my constituents and small businesses in particular. You know, number one is a $300 check that are keeping people home and not working and not being able to have small businesses have enough employees to actually open their businesses and provide the goods and services that they can. Number two, it goes to the taxes and regulation being proposed by this administration. You know, it's going to hit just square on top of small businesses. You're looking at, even if you talk about the C Corp rate going to 28%, that's a 30%, 33% increase. There's 1 million small businesses that are C Corps. The other 95% of small businesses are S Corps, but even there, the increase of the cap gains to 43%, the stepped up basis on inheriting property is going to decimate small businesses and not enable them to pass their business along. So those taxes are going to be borne by small businesses, and they're very, very concerned about that. Then you have inflation, which your previous guest talked at length about, but that is also a worry in the back of the minds of all these small businesses, and it's all fueled by the actions of this administration. You stop the pipeline up north, you stop permitting, and immediately energy prices have gone up, and the ripple effect of inflation through our economy is obvious. Everybody can see this. The taxes that are being proposed are hugely going to be affecting small businesses. So the economy that the Biden administration is trying to put together with their proposals is absolutely the antithesis of what we should be doing and what the previous administration did to energize this economy, let people and businesses keep their dollars and invest them themselves. And you saw the ripple effect across the economy. Everybody was successful as a result of that. And we're very, very concerned that if you roll back those tax cuts that were there, which this administration says they're going to do, and remember, he says everything is going to be at $400,000 or more. If he rolls back the tax cuts, remember there's a tax credit for for child care in there. You remember that they doubled the deduction for children or for dependents and their families. Those are going to go away if you do away with the tax cuts. So when he talks about the shiny object of 400,000 over here, don't forget, in the meantime, he's down here harming all of our low and moderate income folks and small businesses with all of those tax cuts that will go away.
Sounds like it's going to be a long, hot summer on Capitol Hill, I'm afraid. Many thanks for Congressman for being with us. That's Representative Blaine Luetkemeyer, Republican of Missouri. A programming note now, Wall Street Week airs tonight at 6 p.m. We're going to speak to former Treasury Secretary Larry Summers, also David Booth of Dimensional Fund Advisors, and Darren Williams, CEO of Southern Bancorp. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time for Stock of the Hour, and AMC Entertainment saw its fifth double-digit gain of the week at today's high as retail traders scramble to buy shares, although now I see it's down like 6%. Let's go to Dave Wilson, our stocks editor, to explain all this to us. I guess, is this the definition of a meme stock, Dave?
It sure looks that way, David. I mean, it's been a wild week for AMC and an even wilder day today. I mean, you're talking about a company, movie theater owner, whose shares more than doubled in the first 4 days of the week. Today, they were up as much as 38.5%, and they've given back the entire gain. You could argue it's the speculation of the amateur traders on Reddit or wherever kind of running up against the reality of what AMC faces. We're going into Memorial Day weekend, big time at the box office. You have some major movies coming out. Cruella from Disney, A Quiet Place Part 2 from Paramount. And so the question becomes now, are people going to want to go into the theaters to watch these movies? Because they actually have options. In the case of Cruella, you can go on Disney Plus and watch it if you're willing to pay $30. You don't have to go to the movie theaters, AMC's or anybody else's, to see it. So, that's the challenge these companies face going forward. AMC in particular, trying to get its business back to something like what it was before the pandemic hit. And we'll see how that unfolds. And in the meantime, a real bout of speculation this week, giving way to a pullback today.
Okay, thank you so much to Dave Wilson for that report on AMC all over the place. Coming up, we're going to talk with former Republican Senator from Massachusetts, Scott Brown, about the decision today of his colleagues not to form a special commission to study that July 6th attack on the Capitol. This is Balance of Power on Bloomberg Television and on Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, President Biden will kick off congressional spending negotiations today when he sends lawmakers his full fiscal 2020 budget proposal. Lawmakers are facing tough debates about the size of the deficit, how much funding to provide the military, and whether to end a decades-old ban on federal funding for abortions. Budget negotiators may rely on a stopgap spending measure to avoid a shutdown after the September 30th deadline to fund the government. A Hong Kong court has jailed media tycoon Jimmy Lai and other pro-democracy activists for their roles in organizing a protest that highlighted opposition to the Chinese Communist Party on the 70th anniversary of its rule. Lai received a 14-month jail term. That protest was back in October of 2019, which was National Day in the country. Many demonstrations that day started out peaceful, but then turned violent as police cracked down. Japanese Prime Minister Yoshihide Suga is extending a state of emergency for Tokyo and other major cities. It's a last-ditch effort to rein in COVID-19 infections ahead of the Summer Olympics, which many Japanese citizens are worried could turn into a super spreader event. Japan has one of the lowest vaccination programs in the developed world. The UK has cleared a vaccine for use from Johnson & Johnson. It's the first single-dose shot to be authorized in Britain. The move gives Britain a fourth shot in its arsenal, though its use may be initially limited since more than half the population has already received at least one vaccine dose. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. January 6th is a day that none of us will soon forget, as we saw a mob break into the Capitol, interrupt the counting of the electoral votes for president, and threaten the lives of lawmakers. But Congress is having a tough time agreeing even on a commission to investigate what went wrong. Welcome now one of those who served in the Senate. Scott Brown was Republican senator from Massachusetts and then served as President Trump's ambassador to New Zealand. So, Mr. Ambassador, thank you so much for being with us. Appreciate it. You've written about this, and you have a particularly strong view, particularly for your Republican colleagues in the Senate who just today blocked this investigation.
Well, obviously, they didn't listen, and quite frankly, I believe they missed a rare opportunity to do truly an independent commission. As you know, we had Republicans on the House side negotiate what I believe, because I've obviously passed the legislation, a truly bipartisan bill, the ability to have equal across the board, and that's very rare. So what you're going to have is Nancy Pelosi and Chuck Schumer probably doing the select committees that are going to go investigate, and they're all going to be partisan, very similar to what you saw during the previous administration. And it's kind of sad. I mean, I even said, I'll do it. You got General Petraeus, Olympia Snowe, Evan Bayh, Joe Lieberman. I mean, there's so many people that they could appoint to do this and do it by the end of the year. And I think the American people deserve it because, remember, this isn't about just the president and his role. It's also about Nancy Pelosi and her role because, don't forget, she's in charge of the safety and security of the Capitol, and there was clearly an intelligence breakdown. Where were the police? Where were the backups? They knew or should have known that something was about to happen, and we do know that they knew. So let's find out because, as I've mentioned before, can you imagine if that was a foreign actor and they were going to storm the Capitol and the lack of really an effort? I mean, you had some civilians do it who are pretty fired up. Imagine if they were armed and ready to go. We'd be in deep trouble.
Now, one of the things, Senator, we hear, Mr. Ambassador, I should say, that we hear from Republicans.
Scott's fine, David.
Okay.
Scott's fine.
Okay, Scott. One of the things we hear a fair amount from Republicans is, look, there's enough investigations going on already. There are criminal investigations. There's various things that are being done on Capitol Hill. Why do we need one more?
Well, I heard your previous guest, and I certainly respect his opinion, but I respectfully disagree with it because to have an independent investigation with truly independent people with absolutely no motive except to basically, have the facts and determine what they are and let the American people know. Transparency, because don't forget, people around the world watched us on January 6th. They watched what happened, and quite frankly, our reputation was diminished. When I got back, I was 4 days on my new job as Dean of New England Law Boston, and I thought I was watching an action movie or some type of Banana Republic situation. But it was our capital, a place where I worked, and I knew some of those officers. I knew all of my former colleagues. I know where they had to go and how, and I spoke to them after. And it should never, ever, ever happen. We have an affirmative obligation to the American people and to the world as the leaders of the free world to make sure we're as transparent as possible, figure out what happened, and make sure it never, ever happens again. It's embarrassing. I'm angry and I'm embarrassed, and I'm embarrassed for my Senate colleagues right now.
So let's go a bit more broad into the questions about elections, because that's actually what sort of triggered this was disputes about whether the election was legitimate, even though there was no real proof that there was widespread fraud. We now have various states, Georgia, Texas, various places really clamping down on voter security. What do you think should be done? Because Republicans seem to want to clamp down on voting. Is that a big problem in this country?
Well, obviously you have elected officials all around the country, different states, different geographies, different political beliefs. I believe that the process should be as transparent as possible. I believe we should photograph and have the TV cameras there looking at everything 24 hours so it's out there for everyone to see so we can basically export that transparency around the world to other countries that don't have that. I want to make sure that the votes are accurate and U.S. citizens are voting. I want to make sure that they're counted properly and that they're secured properly and that we find and then verify really immediately the votes so we can actually have a victor. That's it. There certainly is a process, and I know when the president, remember Bush and Gore back in the day, they went to the Supreme Court. There is a process. The process worked then. The process worked now. It's messy. It's definitely messy, but we did it because we are a nation of laws, and there was no bloodshed. Obviously, aside from what we saw after the fact of January 6th, which is completely unacceptable. And we can do it. We're the United States of America, David. We should be able to do this by now.
We're the United States of America, but also you're a member of the Republican Party. What is the future of the Republican Party? And particularly, what is President Trump's role in that future? Is he the de facto leader going forward?
Well, I don't know what his status is going to be, quite frankly. I live in New Hampshire. It's first in the nation primary state. I'm an undecided voter. I'm going to have my no BS backyard barbecues. I had 16 out of the 20 candidates to my house last time. Very, very well received. I think we need a vibrant two-party system, and I believe that our party has to decide whether we're a big party, a.k.a. Ronald Reagan, or we're going to be a more limited, defined party. I believe that we should always be a big party because there are a wealth of ideas that we can basically use to basically represent the American people. And if we're not a big party, I think we're going to be in trouble.
Is there a standard bearer for the big party or big tent, as some people say? Because I must say, I think a lot of people across the country react, whether they agree or disagree, to some of the issues involving voter rights as being not a big party, but a smaller party.
Yeah, that's a great question. I've been away for almost 4 years, and I hope that there's going to be more than just one person rising up and carrying the mantle and believing in good government, fairness, openness, transparency, and the ability to make sure that people have the ability to live free and enjoy their lives, go to the movies, and not, here we are, we're arguing about masks, which are important, but while China's trying to basically eat our lunch, manipulating the currency, stealing our intellectual property, building and militarizing islands. You got the hackers with Russia. You got Iran exporting terrorism around the region of the world. There's so many things that we need to work on. And by the way, the president's budget, it's dead on arrival. Just like President Obama's budgets were. It's probably going to get 0 votes, but at least it's a starting point. You know where his head's at, and you know where his head's at. He's going to try to spend more and more and more of your taxpayer money. And we have to find a way to come back and reel in the debt, reel in the deficit, and basically do the things that the American people want, which are fix our roads and bridges, fix our educational system, and make sure we can be safe. Pretty simple.
Okay, it's really great to have you with us. I hope you come back. There's a lot more to talk about. That is former Senator Scott Brown, now Dean of New England Law, Boston. Coming up, getting the restaurant business up and running. We talk with the largest franchisee in the country, Greg Flynn of the Flynn Restaurant Group. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. America's restaurants were hit as hard as any businesses in the country when the pandemic hit, laying off as much as half of their 15 million employees and seeing some 16,000 restaurants close, perhaps permanently. Now that the country is coming back to life, restaurants face new challenges in getting employees back to work and getting supplies that they need. We welcome now the largest franchisee in the country. He is Greg Flynn, and he is the founder, chairman, and CEO of the Flynn Restaurant Group, which operates 2,400 Applebee's, Taco Bell's, Arby's, Pizza Hut, and Wendy's restaurants are all around the world, all around the country. So great to have you here, Greg. Give us a sense. I just watched the evening news last night. Going into Memorial Day, I heard about restaurants in the New York area, at least, they were having trouble getting people working in the restaurants, so they can't serve all the people they want. Are you having that experience?
Yeah, everybody's having that experience. I don't think it's confined to the restaurant industry. It's through our whole supply chain, and that causes all sorts of issues. But my observation is it's really, economy-wide. It's hard to say exactly what's causing it. It's much discussed about supplemental unemployment insurance being a cause. We have a very interesting opportunity to test that thesis because 22 states now have said they're not going to accept the federal supplement. And we'll see if that's what caused it. There are other causes such as, childcare concerns about the disease, and people have just gotten accustomed to being at home. But we'll see. I sure hope it works, and I hope they come back to work.
We heard from President Biden yesterday saying, you just need to pay people more money. You'll get them back to work. Is that your experience? Have you raised salaries, wages?
We have. We've always needed to be competitive in our own markets, and we need to pay what it takes to staff our restaurants fully. And wages are rising. Money isn't everything. It's one of the components that employees consider. And of course, the first step to having staffed restaurants is keeping the people you have. And so we really focus on that first and foremost. We say to our managers, imagine there's a hiring freeze for 90 days. How would you treat your people differently? Okay, now do that, because that's effectively what we have in front of us. But we nevertheless still need to keep recruiting, and we use all the tools at our disposal for that.
As you know, President Biden has backed a $15 an hour minimum wage, hasn't made it through Congress yet. If that came to pass, what would it do to your business?
It would, my big concern about increasing the minimum wage to be, a living wage is that there are many entry-level jobs that aren't necessarily worth that in pure economic terms. And businesses will find a way to automate around or otherwise become more efficient and eliminate those entry-level jobs. That's hardest on the people who need those jobs the most. That inner city kid who needs to get his foot on the employment ladder the first time. I actually think that other countries have come up with interesting solutions around this. So there's a bifurcated wage in many countries, a training wage or a youth wage that is lower than what is defined as a living wage for full-time adult workers who have families to support. It's worth exploring, I think.
Greg, obviously workers are maybe the most important ingredient you have, but you also have a lot of things, inputs into what you do. Are you having any difficulty in getting some of the foodstuffs that you need in order to serve in your restaurants? I mean, things like chicken. Are you having supply problems?
We are, yeah. It's pretty broad and it's pretty deep. And it's a problem with supply coming from, for instance, chicken manufacturers. Our main protein we sell in our Applebee's restaurants, one of our mains is 7-ounce chicken breast, very, very basic item, but we're very tight on those right now. Like, we can't promote chicken because we can barely keep up with the demand on a steady state basis. But it's also our distribution network. It's even when we have the product, our distributors are having trouble finding drivers to get them to us. We actually have gone to distribution centers ourselves to pick up product. We also are bringing in refrigerated trucks to keep in our parking lot so that we can keep more supplies on hand to last a couple of weeks versus getting deliveries twice a week. You scramble to make sure we're open, but so far we're managing.
Greg, typically when you have a shortage of supply, it drives the price up. Are you having to pay more for some of those inputs? And by the way, can you pass that along to the customers?
So we are having to pay more. In most of our systems, we have purchasing co-ops, and in many cases, they buy forward. So we have price protection. Even then, if a supplier can't supply us and they need more money from us in order to fulfill the basic contract, that's something we have considered in the past. The ability to pass that price on to consumers is a tricky one. I think given the pent-up demand, high savings rates, stimulus payments, supplemental unemployment insurance, low interest rates, high housing prices, high consumer confidence. We have more permission now to take price than we probably ever had in the history of the industry, or in my experience. I don't know how long that's going to last. And I fear that if we're aggressive on pricing now, once this hyper demand settles, that we may be in less of an attractive value position. And we're always very value conscious as long-term value players in all of our brands.
A lot of your businesses in the fast food area, has that actually given some boost because of the pandemic? A lot of people, me included, have turned to fast food in this difficult time.
Yeah, well, anything with a drive-through did really well during COVID for pretty obvious reasons. I'd say the more surprising tailwind from COVID that I think is going to be a long-term tailwind for the restaurant industry is the immense trial we got for our off-premise business in our full-service restaurants. So Applebee's in particular, we have 450 Applebee's restaurants. They did about 12% of their pre-COVID sales in off-premise before the pandemic. That 12% rose to almost 60%, in the depth of the pandemic when our dining rooms were still fully closed. As they've reopened and restrictions have been lifted, it's still, in the 35, 40% range. That will, and it's very profitable business for us. That will be a long-term step function improvement in that business if it holds. And from what I can tell right now, it's going to hold. I mean, a lot of people tried Applebee's, when they didn't feel like cooking one night, and they realized It's delicious. It's healthier and better for you than fast food. It's easy. It's not expensive. It's a good alternative.
Okay, maybe some good news coming out of the pandemic. Thank you so much. That was really helpful. Greg Flynn of Flynn Restaurant Group. A programming note now, Wall Street Week airs tonight at 6 p.m. Eastern Time. We're going to talk with former Treasury Secretary Larry Summers, also David Booth of Dimensional Fund Advisors, and Darren Williams, CEO of Southern Bancorp. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We talked today with former Treasury Secretary Larry Summers for tonight's Wall Street Week episode, and Larry found himself in the unusual position of agreeing with Senate Minority Leader Mitch McConnell on one part of how we get the money we need to invest in the country, but only one part.
Well, I wouldn't have necessarily expected to be on the same side as Mitch McConnell, but I think on that question, he does have the right view, and I think I have a view that we would do well to follow. But the minority leader is selective when he quotes me, because he doesn't tend to pick up on my view that the Trump tax cuts are looking increasingly grotesque in the current environment of massive stock market, zero cost of capital, all of that, and the kinds of steps that President Biden wants to take to restore some normality to corporate taxation, and to at long last do what we all ought to be able to agree on: crack down on the erosion of profits because they're moved to the Cayman Islands and places like that through international cooperation. I have to say I'm disappointed that that can't be an area of bipartisan American cooperation. I would have thought that that was the kind of thing that Republicans would stand for on strengthening America grounds, encouraging investment in America. So I think the minority leader is way too selective in his focus on what we should do about the deficit, and deficits have to do with both revenues and spending, and I sure wish the minority leader would get behind revenues.
That was part of my interview with former Treasury Secretary Larry Summers. You can hear more on Wall Street Week, airing tonight at 6 p.m. Eastern Time. For more, let's bring in now Michael McKee, our international economics and policy correspondent. So, Mike, the thing that Mitch McConnell and Larry Summers are agreeing on is you could take some of the money already appropriated, particularly to help the states, and really redirect it, because the states don't need the help that we thought they did. Do they both have a point?
They do have a point. Much of the amount of money that went into the state aid programs was calculated last year when things looked really bad for the states, but many of them have found their businesses have recovered more quickly, their tax revenue has recovered more quickly. California, for example, has a $76 billion budget surplus this year, so there's a feeling they don't need all this money. The states will tell you that they have been the victim of cutbacks from the federal government for quite some time, and they still have holes that they need to fill. They've cut their spending, and they didn't need to or didn't want to, and they could use that money.
Larry's become well known for his concerns about inflation here with all of the fiscal and monetary stimulus. We now are about to get a budget announcement out of the White House that reportedly is going to be like $6 trillion, $1.3 trillion in deficits over the next 10 years. Is that going to make things worse? We got numbers out this morning that did indicate that core PCE deflator is like at 3.1% annualized.
Yeah, we can take a look at those numbers as we go forward here, and you can see that the PCE number, the headline number that the Fed follows, rose to 3.6% in April. That's the highest since 2008. The core went to 3.1%, the highest since 1992. So there's a case for inflation in the short run now. But the difference between this period and the budget is, as you mentioned, over a 10-year period. So the spend out will be a lot slower, a lot less money going into the economy any one year compared to what happened this year.
Yeah, at the same time, Michael, as we both know, you know so well, having reported from Washington for so many years, there's a long way to go between a budget proposal and what actually gets enacted. Okay, many thanks now to Bloomberg's Michael McKee. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to former OMB director under President Trump, Russ Vought, as the Biden administration does unveil in the next hour its first budget. This is Balance of Power on Bloomberg Television and on Bloomberg Radio.